Opportunity zones. What is that? Hey taxpayers, it's Tiffany Gonzalez CPA here, founder and CEO of Accounting to Scale. And today we're back with another installment of What is that? Where we discuss financial terms and topics that you may have heard, but we make them super easy to understand. Today, we're talking about opportunity zones. Opportunity zones are a new investment vehicle that provide tax savings for investors. So let's tune in and get your financial IQ up. Opportunity zones. What is that? The 2017 Tax Cuts and Jobs Act created the Opportunity Zone Fund program, which essentially provides tax incentives to investors to invest in specific communities. Since the passing of the law, there have been opportunity zones identified in all 50 states. The purpose of the Qualified Opportunity Zone is to help a community that is in economic stress. Rather than using taxpayers to fund economic stimulus within this community, the government is incentivizing private investors to do this instead with tax savings. To encourage private participation from investors, anyone who participates in the Qualified Opportunity Fund could see huge tax savings. To find an opportunity zone near you, check the IRS website. So how does this work? We start off with an investor who has recently realized a large capital gain. That could be from the sale of stocks or the sale of other real estate. So instead, within 180 days, they can contribute that gain into a Qualified Opportunity Zone fund, which can help them defer the gain for a few years. Beyond the ability to just defer the gain on that initial sale, they can also experience a tax savings on the growth of the Qualified Opportunity Zone Fund investment. If an investor holds their investment in a Qualified Opportunity Fund for more than 5 years, they receive a 10% exclusion on their gain. If the investor holds for 7 years, they can see a 15% exclusion on their gain. And if this investor holds their investment in the Qualified Opportunity Zone Fund for 10 years, they will pay no tax on the appreciation of that investment. This is crazy. It's one of the most lucrative tax incentives of all time. So, to be clear, the permanent tax exclusion only applies to the 10 years of the appreciated value of the initial investment. It doesn't apply to the deferred gain that the taxpayer was seeking from the initial sale that they used to invest in the fund. I know that this can all sound confusing, so let's use an example to put this into perspective. Let's say a taxpayer sells an asset that they have, and they sell it for a net $1 million in capital gain. Under normal circumstances, this taxpayer would pay a flat 20% capital gains tax because they held this asset for more than 1 year, and that would result in about $200,000 in taxes. However, if within 180 days of the sale, they turn around and invest that $1 million into the Qualified Opportunity Zone Fund, they can defer that $200,000 tax gain. Now, let's say 10 years from now, that $1 million that they put into this Qualified Opportunity Zone Fund is now worth $3 million, and they sell that asset. There is a $2 million appreciation in value there. Technically, they'd have to pay tax on that, but that tax is permanently excluded. Essentially, they're only going to pay tax on the deferred gain of the initial investment, the $200,000. And that's what makes this so crazy. Opportunity zone funds are a way to definitely stimulate economic growth in a community that needs it, but they're also a way to really grow your financial wealth if investing in real estate is something that you're interested in, and if you have assets now that have appreciated in value that you'd like to sell. Opportunity zone funds might not be the right fit for every investor profile. This is why it's so important to speak with your CPA and your financial advisor. It's important to pick investment vehicles that really align with your goals. We hope you enjoyed this latest installment of What is that? please hit the like button and subscribe to our YouTube channel. Follow us on LinkedIn, Instagram, and Facebook at Accounting to Scale. Until the next video, your favorite CPA, Tiffany Gonzalez.